Hello and welcome to the Ask About Wealth podcast. I'm delighted to tell you that today we have back once more Gavin Gallagher. Gavin is a property investor. He is a property investment coach and mentor. He's the presenter of Behind the Facade podcast. And we've asked Gavin back because he was here last spring. But as we predicted then, we got a whole bunch of questions and a whole bunch of new things to talk about. So, Gavin, thanks for coming back to us today.
Paul, delighted to be here.
As we were talking before we started the tape rolling, Gavin, I mean, maybe we can start with what has changed since you and I last spoke in the whole property area. And, you know, I'm particularly interested in things you told me like attics and garden buildings. And of course, March 2026, which is on a lot of landlords' minds. So can you broadly outline to us what has changed since we last spoke?
Well, probably the biggest change that has taken place has been the imposition by the government of the rent pressure zone system throughout the entire country. So prior to this change of law, or whatever you want to call it, there was certain towns around the country that were in a rent pressure zone, so you couldn't increase your rent beyond certain levels. And there was talk about them abolishing it because it was seen as not really working. There was two houses right next to one another. One of them might be getting $2,500 a month, and the other one might be getting $1,200 a month, and
for the
exact identical property. And the person at the 1,200 just couldn't get the price up to the $2,500 because of the pressure zone system. And so they were talking about getting rid of that. And I can remember sort of saying that will be a positive development when that happens. And what happened then was I heard that two towns had been added to it. Castlebar and Tullow had been added to the rent pressure system. And I remember putting it out in my own podcast saying, why would you add two more towns when you're in the process of dismantling the whole thing? It doesn't make sense. Like, obviously one department's not speaking to another. And sure enough, within about a month, they had decided that, no, the entire country is now a rent pressure system. And so the rent pressure zone. So your RPZ now, no matter where you are in the country, you are unable to increase your rent above certain thresholds. I think it's 2% a year. And so that has spooked a lot of investors that thought that they had this freedom of they had chosen to buy outside of the rent pressure zone. Suddenly now they find themselves in it. And I can remember thinking to myself that this is probably not a good thing because a lot of landlords feel already the rent pressure system was a good reason to get out of the market. Now, there was various other things that we can talk about, but one of the reasons there has been an exodus of landlords from the market. And I speak to a lot of different people about this, and they say really, first of all, landlords feel like they're taxed up to the neck. Mm-hmm. But second of all, it's all of these regulations around you have to register for the RTB. If you're in the RTB and somebody stops paying you rent, there's all sorts of delays in taking action against that person. And there has been a number of anecdotal kind of reports of this by people on social media saying it can take 18 months to get rid of somebody. So a lot of people,
even if that somebody has stopped paying you rent.
There's a solicitor who's well known on TikTok and stuff, and I've been following him. And he did a video recently where he was talking about tenants stopped paying him rent, so he went through the system in the RTB. They had this thing set up. The guy didn't show for the meeting, so they said on the balance of probability, it looks like the guy is in the wrong, so we're going to say he can be removed from your house. He never moved out, so the guy had to take a district court action against him. The guy never showed up at the district court, but the district court screwed up or whatever. So anyway, 18 months later, the person is still living in his place, not paying any rent. And so that's just one example, but that's a solicitor who's kind of understands the law.
Yeah.
So you can imagine somebody who bought a property or inherited a property thinking, oh, no way, I don't want to get into this complicated world.
And that feeds into something you and I were talking about just before we turned the cameras on and the recording system was regulation is well-meaning from what I can see, for the most part. But often there is no real thought into the future on regular. What will this mean? Okay, we can see the benefit immediately of, a rent pressure zone, for example, which protects tenants from major increases. And,
Yes.
if you're a tenant, that's a good thing. But as you say, and the tenancy board and bringing that regulatory body to oversee, that was a good thing.
Yes.
Probably for both landlords and tenants, that gave it some structure. But with that story you've just told, those structures, as good as they might have been in theory, are failing, aren't they?
Well, I think there's second order consequences that fall out of government policy. And I'm sure that everyone who creates these government policies, they're well-meaning, they have good reason to do it. They see various negative impacts in the market and they say, maybe if we do this thing, that will eliminate that problem. And so it's started for a good reason. But I think the problem is that once people have done it, they're very reluctant to make any kind of admission that it's not working, or that that whoops, we over-regulated here. And I think that's the big problem. And there's lots and lots of cases where this is not working, and they don't seem to be able to accept that they made a mistake and that they need to either repeal it or make some sort of an interim change to it. And for example, I was saying to you that earlier that there's a recent report from Owen Riley, the estate agents, and they put out this report on the amount of purchasers of their property. So they said of all the buyers in the second quarter of 2025, it says 92% of them are purchasers looking for a home. Only 8% are landlords. And on the selling side, 78% of all properties being sold are by landlords. And so you can see there's exodus.
No doubt exodus. Landlords are running away.
There is an exodus of landlords.
Which is contrary, of course, to what the state wants.
Yeah, the state
we've got a housing crisis.
The state, you have a lot of people that want to buy a house. We all accept that. And when people kind of say, oh, landlords shouldn't be allowed in the market because, people should be able to buy instead of a landlord, And that sentiment's fine, but what about the person who wants to rent because they don't qualify for a mortgage? Where does that person rent from? Because
exactly.
Every landlord who leaves the market makes far more demand and far less supply, which is obviously going to do one thing and just push up the price.
Yeah.
And so you now have something like 10,000 people squabbling over 500 properties instead of, whereas before there would have been thousands of properties and thousands of landlords. Now suddenly there's a big shortage and people just say, I've had enough, I'm just getting out.
Yeah. And of course, one of the things I've often said here, is that, why we look at REITs, for example, or these big real estate investment vehicles. And the biggest difference between them and you and me is tax, isn't it? The biggest cost to landlords is tax. And, it seems to me that we're taxing landlords out of the market at the exact same time when we need to be incentivizing landlords because we have, a major crisis in terms of homes available.
Yeah, and the thing is, and this is another one of the changes recently made, is that there's a new system coming in March of next year. And so on the 1st of March next year, there's going to be, it won't be allowed to evict somebody. There will be no fault evictions for a period of 6 years will become kind of the norm. And now, obviously, if somebody stops paying rent and stuff, that's a breach.
Yes.
But for somebody who decides...
The RTB will sort that out for you in 18 months, won't they?
The thing is for somebody who owns a property and rents it to somebody on the 2nd of March next year, they are renting it to that person for 6 years, and that's it. Now, if you have only 1 to 3 rental properties, then you're deemed a small landlord. And there are certain circumstances where you can breach that. If you're in financial hardship yourself, or if one of your immediate family members needs the property, then you can breach you can evict the client or the tenant for that reason. But once you go to 4 properties or more, you fall into the large landlord category. So the person with 4 properties is now categorized the same as the REIT with 2,000 properties. And so suddenly you're in a situation where you cannot evict for any reason at all if you have 4 properties. And And so somebody's going to be there for 6 years. Now
there must be a way I mean, as you said earlier a moment ago, you can evict if they don't pay you.
Oh, well, that's
There's
different.
a process.
But I mean,
if they breach the terms
if
of the
you own
lease.
4 properties and you decide, you know what, I want to sell this property, you will have to sell it with the tenant in situ. And that is not always the most attractive.
Well, that limits your buyers, doesn't it?
It means that the 92% that are buying at the moment
won't buy it.
won't buy that one because that's only for a landlord to buy.
Oh, yeah. I wonder, is there, I mean, there's some planning to be done here probably too, listening to what you're saying there. If my wife, Jenny, and I were buying property, which we're not at the moment, but the planning should be I should have 3 and she should have 3. So
that will be, that is the way.
Is that something that will mean we could have 6 but not be subject to the large landlords?
Yeah, that is what's currently happening.
Is it?
Yeah, there are people
I'm not
sort
a
of
genius
transferring.
I've got a great idea, but other people have had it.
But the thing is there's people that I work with that have bought multiple properties over the last few years, and they don't have a pension fund. They don't have stocks and shares. Their form of
their pension
retirement
fund is the property.
Yeah, they've built up this pension fund in the form of 6 or 7 properties. And those guys are now a bit nervous about, what about the flexibility of if we want to sell if you want to sell a property, maybe reduce your debt or something like that.
Yeah.
Suddenly now
or
you have
release
to sell
some liquidity for
exactly
filling the fridge.
for anything. Yeah. So there are these concerns, and what it's actually done, and this is what I mean about the second order consequences, is anecdotally I'm hearing that just this exodus of landlords has increased, and a lot of people have triggered eviction notices now because they want to be out of the market by next March. And they're thinking to themselves, I have to give somebody 6 months notice, so that brings us up until, so this all began back in August or whatever.
Yeah, of course. Yeah.
That'll mean that the person is out by January. And at least then I can sell the property and I can sell it as an empty house. So this is one of the big...
And sell it to that 92% of buyers.
Exactly, that cohort that are out there buying. And it makes sense. If 92% of the people are buying, it means that you're bidding on a property. There's probably 7 or 8 people all bidding on that same property that are all owner-occupiers. Whereas if you have a sitting tenant, none of them are in the market to buy a rental property. They're all there because they have mortgage approval to buy a house for their home. And suddenly they'd be like, well, can you get rid of the tenant? No, I can't. He's stuck there now for 6 years. Oh, okay. Well, then we're not going to purchase that house. So they will move.
So beyond March 2026, it sounds to me like if you are a landlord and you want to sell your property, there's only 2 potential buyers then, isn't there? There's another investor who has to have the opposite view to you to buy your property when you're selling it.
Yeah.
Let's face it.
Yeah.
Or there's the tenant themselves, maybe.
That's the other option.
That's it.
Yeah. Those are the 2. And obviously the better option would be for another landlord to buy it, because then the rental property remains in the rental market.
Yes.
Every time a property is removed from the rental market, it's just the supply dwindles,
Yeah. Tell me a bit more too. So that's March 2026. Big changes are coming.
There have been some good positive changes.
Yeah,
I mean,
I was hoping there was. So tell me about those.
Well, in terms of planning, there are various rules that are being proposed, and it will mean that you can build in your back garden a small, we say, prefabricated house or something like that, and it can be up to 40 square meters. So that is like a small, studio apartment or something like that. That can go down in your back garden. So if you want to build like a granny flat or something like that, that'll be something that can be done without planning permission. And then also
will be done. Is
at
that
the moment,
legislation been spoken about?
Yeah, there has been talk about it.
I'm
I'm not sure where it sits at the moment, but I do know that the guys that at the moment the most you can build without planning is up to 25 square meters, which is effectively exempted development, like building an extension, like a conservatory onto your back of your house or something. So to be able to actually build 40 square meters in the back garden or something like that.
Which, as you say, can have a bedroom and a bathroom.
That could be,
kitchenette
that could be a small studio
kind of
apartment or
space.
something. And that would add the ability, you might get $1,000 a month for that or something like that, you know.
Yeah.
So it's going to give
Or
somebody...
you can bring granny into it, as you say.
Exactly.
Yeah. Well, that's good. I mean, we'd welcome that if and when it comes. Did you mention attics as well? Is there something changed?
Yeah, I've heard that attic conversion is also going to be something that can be done now without the permission. So, but at the end of the day, a lot of these things they're announced, and then wait until you actually see what comes out at the other end. There have been also talk about after the budget a reduction in the VAT on properties.
Yes.
So developers can charge 9% now instead of 13%. So that will...
But that's limited to certain properties, isn't it?
Yeah, it's limited to, I think, apartment developments.
Right,
and so you're going to be in a situation where I think that'll be absorbed pretty quickly because the cost of construction and things like that is already pretty high.
Well, and that brings me neatly into the next thing I wanted to talk to you about because, and I've spoken about this before, the problem with tax benefits on property, historically, certainly in my opinion, is all it does is drive up the price of the property or drive up the profit of the builder or developer. Because I can tell you a quick story. I had a brother-in-law of mine who was buying a house in Clare, in Kilkee in Clare, around the Section 28 time,
It was Section 23,
23,
37,
whatever. The Western Seaboard one, whichever that was.
Right.
But I remember he paid something like £33,000, because it would have been pounds then, for a 3-bedroom bungalow on its own third of an acre with a sea view. And down in the town, there was a 2-bedroom terrace property with a view back in front of other 2-bedroom terrace back, which was over £70,000.
Because it was taxed.
Because it had a tax break on it.
Yeah.
Is there any way that you could think that tax incentives can be given without them simply filling the pockets of the builders and sellers of property as opposed to the buyers?
There's a perception out there that it only goes into the pocket. I think that, builders aren't actually making as much profit as people would perceive them to be making. I know that, you buy a site. The site is the biggest cost because the build cost is pretty much the same for
no matter
everything,
where that site is. So the material is the same.
The material costs are approximately the same. And so if you're building in the west of Ireland or you're building in Dublin, it still costs you more or less the same. I mean, labour might be cheaper, but it's going to be, the cost of the materials will be the same. You go and buy a site in Dublin that has planning for a certain amount of units. It is priced in at the outset what each unit is going to fetch. And so that's the purchase price. That's where... And so you'll find where people have made the most profit are the ones that bought a property before, say, the land was zoned. And the land gets zoned, and then all of a sudden now you have something that's gone up by multiples. But if you're the average builder who's looking for a site that you can build 8 houses on, for example, that guy is paying so much for the site with the benefit of the planning permission that he's just going to make a small margin on that. He's not going to clean up the way people might perceive. Now, the big named developers, they would have had like huge resources, and they would have bought land on the fringe of, say the county,
waiting for rezoning and therefore being
exactly. And they would have, and I remember hearing stories of some of the bigger guys, like they would have bought options even on land, and the options would have been 30-year options. Wow. And it would be, here's 50 grand, and 30 years from now, I might buy this property from you for $1 million. And 30 years from now, that property is now worth 40 million, and he's able to buy it for $1 million, And so those are the kind of uplifts that some of the bigger guys have been able to achieve.
Okay, but they've been able to achieve it through far longer term planning.
Much longer.
Through parting with I mean, an option to buy for $1 million would have cost a fair few bob.
Yeah.
With no guarantee that it would
Exactly.
ever be worth anything.
And if you have to have the long-term view that, okay, I'm in this business, this is a career, I'm going to be here for 50 years in this business. So taking the 30-year view is very much in keeping with your kind of mindset.
Yeah.
For the average person who's like a tradesperson or a contractor,
Yeah.
they're not thinking 30 years.
They're
thinking like,
a year or
can
two.
I pay the lads that I currently have working for me,
Yeah.
so that they don't leave me and go to another site, and then I've lost my good tradesmen.
Yeah. What you've said there, I mean, you're a property mentor, and therefore I presume your clients and your students are looking to you to tell them, is property, potentially a wealth generator? I mean, a lot of what you've said there would say probably not, but I presume there's,
You see,
what do you think of property in general now? And tell me about, if you don't mind, because property tends to be one subject, but of course property breaks into residential, breaks into commercial, breaks into other industrial.
When I'm speaking with clients, I'm very quick to kind of establish that when you think of property, don't be boxed into this mindset that buy a house, rent it to a tenant, and that is my property portfolio building up. It's a very wide range of things. Like, there are people in my group that have warehouses. There's people in the group that own commercial property, offices. I've been speaking to somebody recently who is a pharmacist, and he rents his pharmacy building. And he was saying to me, is there a chance that I could actually build my own premises, but build it large enough that maybe somebody else could co-locate with me? So maybe I'd have a physiotherapist upstairs and
a GP
and this,
whatever.
That would be a really lucrative investment. And the thing is a lot of people just don't know how to put that together. So I show them how to do that, less of let's go and buy a load of houses that everyone else is competing, because you're just not going to find value in this current market if that's what your kind of strategy is.
Yeah. And tell me about yields then, in terms, I mean, broadly speaking, from what I can see, residential property yields in and around 6 to 8% in this market, from what
it depends.
In terms,
I'll tell you some interesting facts and figures. So when it comes to yields, the closer you get to a desirable area, we'll say in Dublin, the lower they go. So if you're buying in, say, the Ballsbridge area or something like that, you're probably looking at yields as low as 3%.
Really?
You go further out into the more working class areas, those start to rise. So whereas 6 to 8 might sound the average, if you go to, I have a friend who has heavily invested in West Dublin, in the kind of Clondalkin area and stuff, and he'd be getting 10 to 12%.
Right. Okay.
But then I have clients that are in my community that have got portfolios that are throwing off 25% from one single property. And so, depending on where you buy, you can create quite a heavy yield, because you're purchasing at a low price. And what people often are doing now is split the property up into multiple rooms rather than renting it as a home. And so that is quite lucrative, but it's also quite beneficial, because if you've got families,
you give 4 people a home rather than
or,
one
or
person.
8. I mean, what people are often doing, it's called the HMO model, is they'll turn a 4-bedroom home straight away into a 5-bedroom home by the downstairs living room. If you're in a shared house, nobody uses the living room. So that becomes another bedroom. So it's now 5-bed. And they'll often extend it out into the rear garden and maybe build 2 more rooms. So it becomes a 7-bed. And then you have a large kitchen and 7 people sharing. And most people wake up in the morning, have a bit of breakfast, and then they're gone to work. They come home in the evening.
Yeah, these are dormitories in many ways.
It's just a dorm. That's what most people that are kind of working hard and labourers and stuff like that, they're just looking for something near to where they're working.
Yes.
And they're going to amass, as much money as they can. They just want a bed, and that's all they're looking for.
And is that something you help people look at in terms of looking at an individual property?
Yes, we have strategies.
What are the options across, the various options that or the uses to which this property could be put.
Yeah, and at the end of the day, it's very much dependent on the property and the layout of the property. If you know, some properties just will not lend themselves to that. It might be the area that they're in is not sort of suitable. There's also things like just the neighbors and things like that. You know, you might have an area that is used to this kind of thing, but you might have another area where it's not. And so that there would be a lot of, you know, rejection of that kind of use.
And is that possible? Can that neighbour, I mean, is that an official rejection, if you know what I mean? You won't get
I've heard
permission to do it.
Yeah.
Because by the sounds of, sorry to cut across you, Gavin, but what you told me there about the property in the 6-room, 5-room, 6-room, 7 rooms, and then you told us about the extensions earlier, about, you know, the small relative extensions, you don't need planning. So could that be done without any official application, if you like, and therefore
this is
the neighbour doesn't have anywhere to complain?
There is a real grey area at the moment, and we were talking before we hit the camera recording about certain things that were removed from, you know, permission was rejected at a kind of government level. If you go to, for example, bedsits were removed back in 2009 or 10 or whenever it was, and at the time it was for a good reason, but fast forward and you actually realize that it would have been great to have bedsits still as part of the market. Another thing that became very political and was removed was the option of building what's known as co-living. Co-living is an incredibly good way of putting an apartment block there and having a lot of people sharing instead of individual common areas.
Yeah.
It's huge in the US, it's huge in the UK, but for some reason it got politicized here in Ireland and it's not allowed. Now, you can go to university and you can be a student sharing, you know, an 8-room unit, co-living space with a load of other students. You share the kitchen, you do everything, you go off every day to college.
You're happy out.
And then you get your qualification, you leave college. No, that type of living is no longer allowed for you because you're now a professional. And that's effectively what the removal of co-living did. And they you know, it got politicized, needless to say. And there was a narrative that this was like everyone living in a tiny little box and that it was completely substandard and subhuman kind of standards. I think that's completely wrong. When it comes to what we're talking about, the subdividing of a house, it falls into a kind of a grey area because there are lots of people who are unable to get student accommodation in a university. So what's the first thing they'll do? They'll go to the surrounding community.
See, can I get a room in a house?
Let's find it. Let's look for a house. And then, oh, look, here's a 4-bedroom house. The rent is very high. I can't afford to pay that for myself. So I'll go and speak to all my friends and we'll go and we'll just move into this place together.
So they're almost creating a co-living space.
It's just shared accommodation. So the guys basically, usually though in that situation, the student goes to the landlord and says, Mr. Landlord, I'd like to sign a lease with you to move in here. And he's like, where are you? I'm going to the university. And he's thinking, well, can you afford the rent? He says, oh, don't worry. I've got 5 of my friends. We're all going to like chip in every month. But he doesn't sign a lease with 5 people. He signs a lease with the one. So that one kid has to take on the responsibility of the rent.
So if his friends decide to leg it, he's left.
So you can actually reverse the role and simply provide the service and say, listen, that's fine. I will split the rooms up and I'll let all 5 of you pay me individually. The contract is between me and you individuals. I'll cover the electricity bill. You guys don't need to sign up to electricity because, again, one student gets, you know, is responsible for a gas bill, electricity
bill. The rent per room in that case will include the services.
Exactly. Okay. So and if you look at the student accommodation available out there, like, you know, it's usually on a per week basis or whatever. But in terms of what we're talking about here, the HMO model, usually it's a monthly amount and it includes your bills.
Right.
And that to me it's a service that you're providing.
So it's providing a service, number one, and it's improving the yield.
It's improving the yield for me.
There may be more work for it.
Yeah, there is more work because you need to get cleaning. You'll have probably a person coming in to clean the common areas.
You'll have turnovers and two of students from semester to semester, perhaps.
Exactly. So on a professional level, that exact same model applies.
Okay.
And so you can see people going out there and doing that, but it is a grey area. It's if you went and applied for planning permission to do this, you wouldn't receive a planning permission to subdivide a house.
Yeah.
But you're effectively doing what people are already doing. Now, so that's where the neighbour comes in, is that you're doing something that you shouldn't be doing and that you haven't got permission for. And then all of a sudden you can have a knock on the door and it's somebody coming in to set up.
And therefore, in terms of your mentoring and coaching, are you able to tell your clients, well, this is an area where that is possible and this is an area where you shouldn't bother trying because...
Not so much that, but what I have done is we are all sort of walking on ice, I so to say it. And this is a grey area. It's not, there are some risks associated with it. And you go in with your eyes open. In the UK, the HMO market is fully regulated. So you cannot create a HMO without a license and sometimes without permission. There's all of these rules and regulations around the size of each room and stuff. They don't currently exist in the Irish market. And so at the moment, some of the clients I have are very professional. They do it, they basically gut a house and they do everything brand new. But there's other people that will obviously take shortcuts and you'll still have the traditional box room that's way too small and a bed barely fits in it and stuff. And there will be people renting that room where somebody gets the big master room. Some of the guys that I'm working with that have done the really professional jobs, they actually make all the rooms the exact same size. They each have their own ensuite. That's typically not the case in a kind of a standard enough house. But one of the things that we've done is we've said, look, if you're going to go and do this, make sure that you're having a look at the rules and regulations that govern the UK market. Because if it's regulated here in Ireland,
it's likely to follow
strong likelihood that they will take the same rules and regulations.
Let me interrupt this podcast for a moment. Do you know how to create wealth? Do you know how to limit your taxation? Do you know how to protect that wealth when you do create it? Well, if the answer is no, our masterclass is for you. Over 12 modules and 36 videos, I will personally teach you how to create wealth, how to minimise your taxations, how to protect that wealth when you create it. Check out the link below, and now back to the podcast. So tell me a bit more about the commercial and industrial property world as opposed to because that, as I said, most people either know or think they know about the residential world, but tell us a little bit more about what's available on the commercial side or what you see is available and what's...
I think commercial is very valuable. It depends. Obviously, everybody has either bought or rented a house, so they're familiar with homes.
Yes.
Whereas when it comes to commercial property, it's a different world. And there's a lot of potential to kind of increase the value of the property just based on the rent. If you buy a house as a landlord and you increase your rents, it's generally deemed to be a negative thing that you've done because some poor tenant is paying a lot more rent and stuff. But if you create a profit in commercial property, it's a business that's paying the rent. And the business might be doing very, very well financially in its own business. So it's not seen as a victim necessarily. And so, first of all, that is one of the big distinctions. But second of all, there is just the way rent in commercial property works, the way the values are worked is that the actual passing rent that you collect in the property, there's a multiplier. And so if you double the rent in your commercial property, you are effectively doubling the value of the property.
Because the value is linked to the rent.
It's linked to the yield, exactly, and all that. Whereas with a property, if you were to go into a home and you were to put in gold sinks and everything like that, the property value hasn't gone up by the value of the sinks.
Yeah.
It might go up based on the area is lifting up in value, generally speaking. But if you're getting, as we mentioned, the people that are caught by the RPZ, if you're getting 2,500 a month in house number 32, and then the one next door, number 33, is only able to get 1,200. When that goes on the market, the likelihood is it'll still achieve the same price as the one next door.
Yes.
So it's nothing to do with the rent,
yield.
the yield.
Yeah. Whereas spending money and improving the yield on your commercial property, as you say,
Is directly influenced.
You're not only improving your yield, but you're improving your capital return as well.
I have I offer private consultations for certain people that just want the one-off discussion with me. And a guy reached out to me who has a car showroom, and I remember going out to him, and he was explaining to me the situation is that the property is owned by a landlord, but the landlord wants to sell, and he's come to me and said, would I like to buy it? And I was going through the numbers with him, and I was like, that's incredible. Like, you can buy this property at that price? He says, you'll be able to basically buy it in your own name and then rent the property
back
to your business. But double the rent effectively, because the business can afford that.
The value.
And the value of the property will go up by double. And so the lender that is kind of reluctant to lend at that price suddenly has loads and loads of equity.
Of security.
Yeah. And the guy, so it was like creating money out of thin air in the eyes of this. Yeah. So it was very interesting. And those are the kind of things that you can do. Warehouses are very popular now. It's funny, when I started my career, there was the office market, which was seen as this kind of like golden asset class. And then the warehouses were seen as this kind of secondary kind of asset class, where the grubby kind of, the workmen, the lower rents, and the yields were around 10 or 12% or something.
Yeah. Dirty and smelly.
It was kind of industrial kind of stuff. Nowadays, because of, deliveries online and Amazon and all this, it's completely changed, and it's almost like a role reversal. And now
because COVID drove people out of offices and they're not going back.
Exactly.
And similarly drove people into Amazon to buy their stuff.
Yeah. And so now everyone buys things and they get delivered to their home. And so distribution warehouses are all over the place. Yeah. And they're huge businesses. And another thing that is very interesting from my perspective when I'm talking about a warehouse or kind of logistics thing, if you think about the office was a place that you went to work, but you can work from home now on a computer. Whereas what happens in warehouses? In warehouses, things are manufactured. It's usually a big, machine, and it prints or it presses or it does something. Those machines have to be housed in a warehouse.
Yes.
Once they're installed, these are huge, big, like if it's a printing press or something, like these are huge, big things. That is not going to be easily relocated to another location. So you have a fixed abode for the next 20 years or something like that.
Yeah, which is a hugely different, of course, than your residential one, where you're doing year on year, or indeed 6-year leases at the most.
It's quite normal to do 10 and 15-year leases
and to build rent reviews into those
every
leases.
5 is quite typical. There's a rent review. And the other thing is about warehouses and stuff like that is, if you think about the process of manufacturing with, say, a refrigerator, the refrigerator is built in a factory. So somebody owns that factory and is collecting a rent. When it's finished and manufactured, it is sent off to a warehouse. And that sits in that warehouse until who buys it? Until the distributor sells it to a retail business to put it in their showroom. It'll go to another warehouse before it ends up in a showroom. Yeah. The warehouses are very, very big business now.
Oh. Maybe as we come to the end of our conversation, and thank you again for coming along. I always find our conversations fascinating. What about the whole area of finance, Gavin? And I know you're not a finance, provider or anything like that, but when you talk to people about how they finance these property investments, have you or your customers, have you found the finance piece easy or difficult? Is it getting easier or more difficult? And if I had the cash to buy something, would you say to me, well, even though you have the cash, borrow the money because there are tax benefits to that? Or would you say to me, no, use your cash, Paul, stay away from leveraging?
I would always, this is funny because I got burnt from leveraging.
You did, you told us about that before. Yeah.
But I over leveraged, okay? And there's a kind of a fine balance, okay, between over leverage and sensible, prudent use of leverage. I would say, let's say you have $1 million in cash sitting in, and you're saying, Gavin, I want to spend $1 million on property. You have a couple of options. Number one, go out and take your full $1 million and buy an asset for $1 million. And now you own one asset, 100%, all cash, no debt, and it's sitting there. So that is producing one income stream. Mm-hmm. The alternative to that is that you go and you buy 10 properties that are all worth, we'll say, 250,000, and you put 100 grand in as a deposit on each.
Onto each of those 10.
And you borrow 150. So now you have 10 properties, the income from 10 properties coming in. If one tenant decides, I'm not paying Paul anymore, you still have 9 properties generating an income. Whereas if you have your one property,
I'm dependent on that tenant continuing to pay.
100%.
So I've diversified the risk in that case.
Exactly. Now the other thing as well.
It's cost me to do that, of course.
Well, it hasn't necessarily, because your 1 million is you now have 40% approximately equity in all of these 10 homes, mm-hmm. and you have 60% borrowed from, say, a bank or something. So they put the money in, and now you've got all of these assets are generating an income. The likelihood is you're probably getting a better yield from that kind of price range than the one house that is costing $1 million. Your yield will be better. But then in addition to that, if the market takes a downturn, what do people tend to do in a big downturn? They move out of the big expensive home and they downsize into something more responsible and reasonable, which is the smaller home. So the side of the market that doesn't get dented so badly is the smaller houses.
Yes.
And so you have 10 houses that still have a lot of demand, whereas the €1 million house.
Yeah, and even if we look back to 2007, 8, 9, 10, while we had the debacle of values, the rental income from those assets didn't really fall away, anything like the capital value. Isn't that right?
That's it. If you look at the big houses, though, they suffered because there wasn't so many people that could afford $5,000 a month.
Yes.
Whereas everyone that was paying $1,000 a month, there was still a massive market, and all the people that moved out of the 5,000 are looking for the smaller properties. Yeah. So there's now more people trying to get into the smaller market.
Yeah. Well, as I said, Gavin, I always enjoy our chats. I think you've given us some great insights today. Thanks for your time. Thanks for your expertise. And just maybe as we finish off, just tell our listeners where they can hear more from you.
Well, I have my social media, and I go by Gavin J Gallagher for pretty much all of it. And then I have a podcast by the name of Behind the Facade. So if you want to get a kind of weekly input of this kind of thing, then come to Behind the Facade.
Brilliant. Thank you very much, Gavin.
Thanks a lot, Paul.